So you're probably tuning in trying to make sense of what's been happening in the markets lately, right? All those swings, what do they actually mean?
Exactly. It's been quite dynamic.
That's what we're here for today. We're going to try and cut through the noise, look at this past week's performance, and hopefully pull out some useful insights. And we're basing this discussion on the Grok Trade Market Summary for May 16th, 2025. So, all right, let's jump in. Looking at the week overall, pretty positive picture, wouldn't you say?
Oh, absolutely. The Grok Trade Summary definitely highlights a strong week. Upward trends across all the major U.S. indices.
Let's get those numbers out there.
Okay, so the S&P 500, that was up a significant 5.3% for the week.
Wow.
Dow Jones Industrial Average gained a solid 3.4%. The NASDAQ saw a really substantial jump, 6.8%.
Almost 7%.
And even the Russell 2000, the smaller companies index, that had a good week too, rising 4.5%.
That's quite a performance across the board. And the summary notes something important here. The S&P 500 and the NASDAQ are getting really close to their all-time highs again.
They are. It's a noticeable shift from, say, earlier in the year. Really strong momentum there.
So that's the week. What about just today, Friday the 16th? Did that momentum keep going?
It largely did, yeah. Friday's trading contributed positively to those weekly numbers.
What did the daily gains look like?
All right, so the S&P 500 added another 0.6% on Friday.
Okay.
The Dow Jones was up 0.7%, NASDAQ gained 0.44%, and the Russell 2000 saw another rise of 0.8%.
So, yeah, definitely helping cap off a strong week. But, it's never that simple, is it? The Grok Trade Summary also points out some areas where things aren't quite moving perfectly together.
Right, and this is where it gets interesting. There's this observation that even though everything was up, the Dow and the Russell 2000 are, quote, lagging relative to the SPY and NASDAQ.
SPY being the S&P 500 ETF, yeah. So the big guys and tech are leading the charge more strongly than the industrials or the small caps.
Exactly. That difference in speed, that divergence, it could offer some clues about what's happening under the surface.
So what might that mean? The smaller companies in the Russell not quite keeping pace? Does that hint at maybe some caution about the wider economy? The summary suggests it could be a sign of lack of confidence in smaller companies.
That's definitely one interpretation, and a common one. Sometimes when small caps lag, it suggests investors might be favoring the perceived safety of larger, more established companies.
Right.
It can reflect worries about future growth, maybe tighter credit conditions hitting smaller firms harder. We've seen that pattern before during economic shifts.
But there's a counterpoint mentioned too, strength in the financials, the XLF. Yeah. That was keeping pace with the S&P and NASDAQ. Why is that seen as maybe encouraging for the bulls?
Yeah, that's an important nuance. A strong financial sector is often seen as a positive signal for the broader market. Banks and financial firms are so tied into economic activity, lending, investment.
Sure.
So their strength can imply optimism about the economy's future. It kind of balances out the small cap lag a bit, suggests maybe it's not all doom and gloom.
Okay, interesting tension there. Now let's shift gears slightly to the technicals. The Grok Trade Summary brings up the possibility of daily chart indicators showing overbought conditions. What does that mean for someone watching the market?
Right, overbought. It's a technical term suggesting an asset's price has climbed very quickly, maybe too quickly in a short time. Think of it like maybe it's right ahead of itself and might need a breather.
So a pause or a pullback could be coming.
It could, yes. Yeah. But, and this is crucial, as the summary points out, indicators can stay overbought or oversold for a lot longer than you might expect.
So it's not a guaranteed sell signal just because something looks overbought. It's more like a yellow flag.
Exactly. A single indicator isn't the whole story. That's why the summary stresses having a robust step-by-step trading plan. You need to look at the bigger picture, not just one signal.
Makes sense. Okay, so we've had this strong week. What's actually been driving it? The summary mentions positive economic developments. What are we talking about?
Well, the big one highlighted is this U.S.-China tariff truce. Anytime trade tensions ease up, especially between major economies like these,
the market tends to like that.
Yeah, it reduces uncertainty about global supply chains, about potential drags on growth. So that provided a significant boost to sentiment this week.
Okay, trade truce optimism. But the economic data itself, it seems a bit mixed, doesn't it?
It really does. That's a key point. While the trade news was good, we saw the University of Michigan's Consumer Sentiment Index actually drop in May.
So consumers are maybe feeling a bit less confident?
It seems that way. And tied to that, inflation expectations went up. Year-ahead projections hit 7.3% in that same survey.
So the market's rallying, but consumers are feeling a bit cautious and expecting higher prices. That feels like a disconnect.
It certainly adds complexity. But then balancing that out, the Grok Trade summary notes we had softer than expected wholesale prices reported earlier this week.
Producer price index, maybe? Showing less pressure at the producer level.
Exactly. And that data point has fueled hopes that maybe inflation isn't quite as sticky as feared, which in turn bolsters expectations that the Federal Reserve might actually cut rates later this year.
Right, the Fed pivot hopes. Always a market mover. The summary says traders eyeing September for a potential 25 basis point reduction. That anticipation is helping things now.
It's definitely a major factor supporting this bullish sentiment. The idea of lower borrowing costs coming down the pipeline makes investors more optimistic about asset prices, even if the cuts are still months away.
Okay, so trade truce, mixed domestic data, but overarching hope for Fed cuts seems to be winning out for now. Let's quickly touch on crypto and metals. What's the Grok summary say there?
Well, Bitcoin, BTC, was apparently pretty flat on Friday itself.
Okay.
But the interesting thing is it broke through what's described as a key resistance trend line.
Technically significant.
Potentially, yes. Breaking resistance can signal that buying pressure is building. So the summary suggests this breakout could lead to more upward momentum if that buying continues.
But the key word there is if. Monitor closely, as they say.
Always wise advice in crypto. Meanwhile, precious metals, your typical safe havens like gold and silver, they actually went down on Friday.
Oh, by how much?
Gold, the GLD ETF, was down 1.2%, and silver, SLV, dropped 1.05%.
And the thinking there, according to the summary, is a shift away from safety.
That's the interpretation. Renewed market optimism, the rally in stocks, means investors feel less need for safe havens. They're moving towards riskier assets, so gold and silver take a hit.
Okay, that fits the overall picture. So let's pull this all together. Thinking about our listeners, both newer folks and seasoned pros. What are the main implications here? For someone newer, what's the big lesson from a week like this?
I think for newer participants, this week is a powerful lesson in just how fast things can move in the market. Those gains are impressive, right?
Definitely.
But it's so important not to get swept up in the excitement, or conversely, to panic if things pull back next week. The key takeaway really is what the summary stressed. Have a plan. Don't chase returns or react emotionally.
Stick to your strategy. Good advice, always. And for the more experienced traders, what are they likely chewing on after this week?
Well, seasoned participants are almost certainly looking at that divergence we talked about, the large caps versus the lagging small cap.
Right. Is that a warning sign or just normal sector rotation?
Exactly that question.
Yeah.
They're weighing that against the mixed economic signals too, the consumer caution versus the softer wholesale prices and the Fed hopes. It's a complex puzzle.
So they're probably assessing if this rally has legs, if it's fundamentally sound, or if it's maybe getting a bit frothy, especially with those overbought signals lurking.
Precisely. They'll be thinking about risk management, maybe taking some profits, positioning for different scenarios, looking closely at sector leadership, things like that.
Okay, let's wrap this deep dive up then. Key takeaways from the Grok Trade summary for May 16th. A really strong week for stocks overall, fueled by that China trade truce news and growing hopes for Fed rate cuts.
Yep, but with some underlying notes of caution. The small caps lagging, consumer sentiment dipping a bit.
And we saw that reflected in other markets too, with Bitcoin showing some technical strength while safe havens like gold and silver fell back, suggesting more risk appetite.
That sums it up well. Which leads us to a final thought for you, the listener. Given this strong run-up, but also these mixed signals in the economy, what are the key things you are going to watch next week?
Yeah, what tells you if this rally keeps going? How do you see those technicals, the overbought conditions maybe, playing against the fundamentals like inflation data or more Fed talk?
That interplay between the technical picture and the fundamental drivers, that's often where the most important clues about the market's next move lie. Something to definitely keep an eye on.